All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Tuesday, everybody. Today's September 23rd, 2025. And the top story this morning is the shiny, once again, the yellow shiny gold. And what the heck are the Chinese up to with gold? There is a story in Bloomberg this morning about how China is asking other countries to store their gold in Shanghai vaults. Basically, China wants to be a custodian for other countries around the world. Now, all right, maybe it seems like a no, never mind kind of story, but honestly, there's a lot of geopolitical implications associated with this story. There's a lot of implications for the direction of gold. And, well, let's just talk about it. First things first, we've got gold is now trading at a premium in New York and London. The price of gold is higher in the West than it is in the East. We have not seen that all year. For the last 2 years, we've seen the price of gold has been higher in the East, higher in Shanghai. And that has caused this flow of metal from West to East as more and more gold has made its way to Shanghai vaults. The PBOC has been a big buyer of gold. They've been adding it to their reserves. But that has reversed recently. We now have gold in the West is more valuable. So there is now an arbitrage opportunity to reverse that flow of gold. Now there's a reason to take the gold from Shanghai, send it back to the West where you can sell it for a couple of more pennies. If you do it enough, you make a little bit of money on that. So that's an interesting development. It's almost like the people in the West are sitting here saying, oh, well, the Chinese are starting to make moves in gold. I guess we better let the price rise. Not saying that's exactly what's happening, but, it kind of looks like it, doesn't it? What else is going on here? The PBOC still buying. The central banks are still buying. But why would you want to store your gold in China? That's another thing. I mean, my initial, you guys know me. I don't think very highly of the Chinese Communist Party on this channel because, I don't know, history, because reasons, the whole, like they starve tens of millions of people to death. Well, whatever. We don't need to get into the whole tens of millions of people murdered. But besides all of that, why would you trust the Chinese with your gold? Who on their right mind would trust the Chinese with their gold reserves? And then it kind of got me thinking, well, who in their right mind would trust us with their gold reserves? See what happened to the Russians when they invaded Ukraine? Not defending the Russians here by any measure, but you can't argue with what the West did to Russia's finances after the invasion. We seized their reserves. Now we're talking about taking those seized reserves and giving it to Russia's enemies. And so if you're another country looking for a place to store your gold, would you be willing to leave it here in the States? Maybe you don't plan on invading your neighbor now, but do you want to sit around and wait until you fall on the wrong side of some issue as the United States, only to have them steal your reserves? And Europe is no different. So the Russian invasion of Ukraine and the Western response to that is absolutely playing a role in this development here where the Chinese are offering gold custody to other countries. And we shouldn't be terribly surprised if other countries, particularly those that are not aligned with Western interests, take them up on the offer. So there is a lot going on here. And the last thing I would say is this is actually a step towards that BRICS currency. Now, I have been highly critical of the whole BRICS narrative on this channel for years. I mean, I harken back to that like August of 2022 story when everybody was like, oh my God, Russia's going to announce their gold-backed currency at the next summit. And everybody was reporting on it. It was this big news and everybody was freaking out. And you could trace every single article about that was traced back to a single tweet from some guy at a Russian embassy in like Tangier or something like that. It was a joke of a story, as much of the reporting on the BRICS currency has been. That being said, if Shanghai is successful in becoming a major global gold hub, then it lends credibility to the story of the BRICS currency. Maybe not the BRICS gold-backed currency, because I just don't think they're going to do that. The Chinese are the most totalitarian government in the world, and totalitarian governments don't give away their power willingly. When you peg your currency to gold, you give away your power, your ability to rob the masses via inflation. I just don't see them doing that. But that doesn't mean they won't launch their own fiat currency, or maybe they'll play some games. They'll call it some kind of like basket of commodities. I've heard that theory floated a couple of times, but it won't be tied directly to gold. You can bank on that. But the BRICS currency, maybe a little bit more credibility to that this morning because of this story. Also, we got some other stories going on involving the Chinese. China is buying a bunch. I was going to say a boatload, but it's actually 10 boatloads worth of soybeans from Argentina. And I can already hear people yawning. I don't care about Argentina selling soybeans to China. I know we're kind of stretching a little bit here, but there's the intersection of a lot of different stories here. You've got the trade war between the U.S. and China is playing a role there. U.S. farmers really need an order for soybeans, for corn. The Chinese are not buying our row crops, and row crop prices in the U.S. are falling because of that. Also, you've got the Chinese, or not the Chinese, the Argentinians or the Argentines. What's the proper plural of Argentina people? Let's say the Argentines. Just sounds fancier. The Argentines really need dollars. The peso has been collapsing ever since some regional elections a few weeks ago, and the Peronists, which is like the leftists in Argentina, the people who freaking destroyed the economy in Argentina, the Peronists, they won by a landslide in these local elections. And a lot of people think that spells very bad news for Javier Milei, which it does in his reforms. And if the Peronists are going to take power again, well, they're going to go right back to the money printing and everything else that they've done. And so the peso has been in free fall ever since that happened. We even had the U.S. Treasury Secretary Scott Bessent has come out and floated the idea of some kind of stimulus or other support for the Argentinian currency in order to keep Javier Milei in power. And so this deal actually helps Javier Milei quite a bit because the Chinese are going to be paying in dollars. So the Argentine Forex banks get a source of dollars that they need to defend the value of their own currency. Now, also interesting, the Chinese are paying a 20% premium for these soybeans from the Argentines. They're paying $2 a bushel more than the $10 they're trading at here in the States. So not only do the Chinese really not want to buy our stuff, they are willing to overpay by a huge margin to buy from somebody else to avoid shopping here in the States. That is significant. Also, the Argentinians have been getting rid of their export tax. Did I say Argentinians? The Argentines have been getting rid of their export tax on food exports, which is a freaking stupid idea to begin with. The Argentines put this tax in place a few years ago when food prices were skyrocketing, something I covered on this channel a lot back in 22 and 23. They put taxes on food exports to try to keep the crops in the country to suppress domestic food prices while also killing their farmers and killing their banks' forex reserves at the same time, which is a really stupid thing for an export economy to be doing. So the Argentine government is now getting rid of those export taxes to try to stimulate those crop sales overseas, to try to get more U.S. dollars into the banking system to defend their currency so Javier Milei can stay in power. The Chinese are happy to help them because they don't want to buy American soybeans. American farmers are in trouble because of that. I told you this story touches a lot of geopolitical issues. You got the Taiwanese are curbing chip exports to South Africa. What the heck is going on there? Well, chips are playing an increasingly major role in geopolitical events. You've got Nvidia is basically backstopping the entire AI boom at this point. I did a video yesterday about this ridiculous $100 billion circular deal with OpenAI that they're cutting. Check out that video. It's in my feed. I got to give the Wall Street Journal credit. They are the only media outlet that will even touch this circular accounting narrative, which now everybody can see it. It's a joke on FinTwit now, how like there was this picture of an elephant filleting itself was going around yesterday explaining the Nvidia deal with OpenAI. Everybody can see it now. But most of the financial press, Wall Street Journal notwithstanding, most of the financial press is still like just on their knees doing everything they can to help Nvidia along, if you know what I mean. CNBC, Bloomberg, wipe off your chin and do some real journalism already. Also, we got France is pushing a wealth tax. All right, who had communism in Europe on their 2020s bingo? And the ironic thing, both right and left in France are for it in an overwhelming margin. You guys, Europe is just lost at this point. I hate to say it. Europe is lost. Orsted's getting a lifeline from a federal judge who said they can resume their windmill construction. We've got drones over airports in Copenhagen and Oslo. We don't know whose drones they are. Are they ours? Are they theirs? Are they Russian? Are they American? Who knows? But airports were closed because of that. That's fun. And of course, we've got a private credit warning to wrap up this show. Stick around to the end for that one. They're playing games with insurance companies now, and it's all about circumventing capital controls. How about that one for the 2020s bingo update? Guys, we have a jam-packed show today. Let's shrink my big melon of a head and see what's going on in the world of finance this morning. And as always, don't forget that like button. You new guys, hit that subscribe button so you can grab your coffee and come back tomorrow because we do this one every single day. Right now, the S&P 500 was unchanged just a second ago, down a fraction of a point, now up a fraction of a point. Let's just say it is flat on the day for the S&P 500. The Dow, meanwhile, is positive by about 73 points or 0.16% to the upside ahead of the open. And the NASDAQ is also unchanged, 0.0. So stocks not really sure where they want to go this morning. Looking over at the U.S. dollar, we've got the Dixie is also unchanged. Is everybody still asleep here? Wake up. More coffee. This market is uncaffeinated this morning. The U.S. dollar is unchanged at 97.31 on the Dixie. We do have a little bit of movement in the bond market this morning. The 30-year is at 4.757. That's down about a half a point. The 10-year, 4.131, down 1.5 points. The 2-year, 3.595, down about a half a point. And the 1 month is at 4.080. That is also down a half a point. Looking over at the commodities board, just check out the shinies this morning, up again. As much as I love to see it, guys, gold going up in a straight line is not a good thing. Silver going up in a straight line, it might be good for Jack, but it is not good for everybody else. Something is really, really wrong here. Look, as my moderator, Mish, put it this morning, it's one of the best sound bites I ever got out of Mish. He says, like, retail is all in the stock market, right? You got margin debt at an all-time high. Retail has bought every stock under the sun. They're all in. And everyone who knows what that means is moving to gold. That was a pretty good, very astute observation by Mish this morning. Shout out to my moderator, Mish, as well as M&J and Nam. My mods are awesome on this channel. Thank you guys for everything you do. But gold is at $37.86 right now for spot gold, up almost $40 or 1% higher. Check out that front month gold contract. We've got a 38 handle, guys. 38.19. Up $44 or almost 1.2% for gold. Again, gold going up in a straight line is not a good thing. Spot silver doing the same. 44.39 for spot silver, up another 32 cents this morning, or 0.75% higher. We went as high on the front month silver contract as 44.77 overnight. Metals just keep going up. I like the shiny. Copper, meanwhile, up by 0.15%. Platinum and palladium both having a good day, up 4% and change each. We've got crude oil is up by 1.4% at 63.14 for November WTI futures. That's higher by about 87 cents. Bitcoin is still limping along here. It's off its lows from yesterday after that brutal sell-off in shitcoins. Still holding here just under 113,000. Coinbase is showing $112,948 for Bitcoin. That's up about $200 from yesterday. I think the crypto guys are happy to have the quiet after the morning they had yesterday. All right, let's talk about this one here. China courts foreign gold reserves to boost global clout. And that is what they're trying to do. By the way, I just want to say a quick shout out and a welcome to those adorable little Pooh Bears, my Xi Jinping bots, who always show up in the comments every time I talk about China and make some kind of ridiculous comment like China, a number one dragon, America, crashing empire, China good, me love Xi. You guys are great. Thank you so much for the engagement. Moving on. China aims to become custodian of foreign sovereign gold reserves in a bid to strengthen its standing in the global bullion market, according to people familiar with the matter. The People's Bank of China is using the Shanghai Gold Exchange to court central banks in friendly countries to buy bullion and store it within the country's borders, said the people, who spoke on condition of anonymity, as the discussions aren't public. The effort has taken place over recent months and has attracted interest from at least one country in Southeast Asia, the people said. All right, they got that one country. Tell me it's Malaysia without actually telling me. The move would enhance Beijing's role in the global financial system, furthering its goal of establishing a world that's less dependent on the dollar and Western centers like the U.S., the U.K., and Switzerland. Countries have been snapping up gold as a hedge against mounting geopolitical risk, creating the opportunity for the PBOC to offer a haven for an asset deemed crucial as a buffer to economic shocks. Demand from central banks has been a key pillar in the precious metals' recent ascent to record highs, and the PBOC itself has been on a buying spree for 10 straight months. Now, as always, there is something good lurking in the last paragraph in a Bloomberg article. That doesn't always work, but typically you find a good nugget at the end of the article. Always read the last paragraph in a Bloomberg article. For prospective clients, Chinese vaults could be an attractive option to build reserves and help bypass the risk of being cut off from the world's financial markets. Central bank buying of gold accelerated after the U.S. and its allies froze Russia's exchange reserves in 2022 after the invasion of Ukraine. China is trying to become a bigger and more influential part of the financial infrastructure, said Nicholas Frappel, head of institutional market at ABC Refinery. If countries choose to store their gold in China, they will forgo the ease and liquidity in London. All right, so London is the busiest and most liquid physical gold market in the world. That's the LBMA. The COMEX is the big futures market where the hedging gets done in the U.S. So you do give up your liquidity and your depth of market if you leave London, but you also protect yourself from having your stuff taken by the United States and Europe. And there are countries that create a market for that, because there are countries that don't always agree with what the U.S. and Europe wants. Shocking, I know. And therefore, because of what we did to Russia's reserves, whether justified or not, the inevitable result of that is other countries want to get their money, their reserves out of our vaults and our banks, and China is happy to step in. Now, I want to send a shout out to David Lee this morning on X, who posted this one. This was a pretty interesting change. Gold has been quiet in Asia trading hours, but rose in European trading hours and then U.S. trading hours over the last few days. China's gold is also at a discount now after having premium over spot for many years. Does it look like a lot of short covering in Europe and U.S. is pushing the price higher? Yes, it does. You definitely have short covering playing a big role here in the U.S. By the way, this is an original post from Hugo here at improved_metals on X. And he posted this chart showing the discount/premium of gold in Shanghai versus the LBMA price. And you can see here earlier this summer, it was trading at a premium over the LBMA price. Then it bounced around zero. But for the last, about the last month or so, gold in China has been cheaper than gold in London. And by the way, gold in New York has been even more expensive. So it is creating an opportunity to buy your gold in the East and ship it to the West, where you can sell it for more than you paid. If you rinse, repeat that enough times, you can actually make a decent amount of money. Also, we've got China traders book Argentine soy after Malay's export tax break. This is a big one. You could call it a tax break, or you could call it getting rid of a tax that never should have been put on in the first place. I guess they're the same thing. It depends, potato, potato. But China-based trading firms snapped up 10 cargoes of Argentine soybeans in a rare buying spree this week, adding to the nation's reliance on South American supply as it avoids U.S. crops, according to people with knowledge of the matter. The move came after President Javier Milei's government on Monday announced the temporary suspension of export taxes on many of the country's key crops in an effort to boost the supply of dollars in the foreign exchange market and ease pressure on the peso. Exempt from those taxes, soybean farmers will reap in pesos an extra 25% for each dollar they get in revenue. It also helps boost their appeal compared to U.S. supplies, which are currently subject to duties of more than 20% amid the trade tensions between Beijing and Washington. The Asian nation is the world's biggest soybean importer, making its purchases closely watched in the global market. The shipments, all Panamax-sized vessels of 65,000 tons each, are slated to load in November, said the people who asked not to be named, as the information is private. They were sold at a premium of more than $2 a bushel to the Chicago Board of Trade's November contract, which currently trades at about $10.05. And gee, look, a premium of $2 a bushel over a $10 price and a 20% tariff. You know what? I'm beginning to think these two things might be related. You think that's how that works? So the Chinese are buying soybeans from the Argentines. The Argentines really need them to do that because they need dollars in their forex reserves in order to sell those dollars to buy their own currency, to keep their currency from falling further. something that has been set in motion by Malay's loss in those local elections in Argentina. Everybody's worried the Peronists are going to take over and turn the money printers back on. And so they're dumping the peso ahead of that. Malay needs to shore up the currency. This will help him do it, while also helping the Chinese give the middle finger to Donald Trump and U.S. farmers. Meanwhile, we've got Taiwan curbs chip exports to South Africa in a rare power move. Taiwan has imposed restrictions on the export of chips to South Africa over national security concerns, taking the unusual step of using its dominance of chip markets to pressure a country that's closely allied itself with China. This is another BRICS story here. Taiwan now requires pre-approval for the bulk of chips sold to the African nation, its trade regulator said in a statement. The decision emerged after Pretoria tried to downgrade Taipei's representative office and force its move to Johannesburg from the capital, Taiwan's foreign ministry said. The move reflects both the island's economic clout and a growing frustration with getting sidelined by Beijing in the diplomatic community. Taiwan semiconductor manufacturing makes the majority of the world's most sophisticated chips, essential to cars, AI, and industrial production. South Africa started asking Taiwan to relocate its de facto embassy to Johannesburg from the administrative capital of Pretoria in 2023, after it hosted a BRICS summit that Chinese leader Xi Jinping attended. A foreign ministry official in Taipei previously told Bloomberg News. So Xi Jinping goes to South Africa. They have their little meeting in 2023. They don't announce the gold-backed currency, as the silly rumors on Twitter were claiming. Xi Jinping tells the South Africans, we want you to kick Taiwan's not embassy out of your capital. The South African government tries to do that. Taiwan says, up yours. We are not going to sell you any chips if you want to play that stupid game. A lot of geopolitical chips in motion this morning. Meanwhile, we've got this one here, how Nvidia is backstopping America's AI boom. Look, guys, I have covered this ad nauseum on my channel, and I'll reference you to that video I did yesterday on this subject. This story is obscene. Nvidia is having to basically create demand for their own chips more and more. We talked about that silly deal where they're basically renting their own chips back from CoreWeave last week. The ink isn't even dry on that story, and now we find out Nvidia is giving $100 billion to OpenAI, just so OpenAI can give that $100 billion right back to Nvidia. Let me just point out one thing here. All right, they're trying to build a 10 gigawatt data center. All right, $100 billion that Nvidia is giving OpenAI, that is not enough just to build the power required. 10 gigawatts is about 1% of the entire demand for the United States, the entire supply of the United States power grid. We're like 1,300 gigawatts or something like that. They're almost demanding 1% of the whole freaking power grid. Now, 1 gigawatt is roughly one nuclear reactor worth of power. And they're saying they're going to build a 10 gigawatt data center, which means they're going to need almost 10 nuclear reactors of power just to pay for this. They're just to power this thing. The last nuclear reactor we built in the United States cost more than $15 billion, which means just the power requirements for this 10 gigawatts of data center will cost more than Nvidia says they're going to give OpenAI. And if they're not going to build new power plants, that means get ready for like tripled your power bills because of stories like this. If they don't start building power plants soon, then we're all going to be put in the poorhouse by electricity rates. And it seems like that's where they're going here because of NIMBYism. And are you kidding me? If we try to build 10 nuclear reactors in this country, the Gretas and the Greenpeacers, they'll be flinging cow dung at everybody. But the one thing I got to say, I got to give credit to the Wall Street Journal, who is saying this at least. They're the only one who says it, even though they didn't say it until the third paragraph. But the deals highlight an issue that some investors are calling circularity in Nvidia's prospects, whereby the company takes steps to boost or shore up demand for its AI chips by supporting startups and other companies. Those companies can then use those funds or new liquidity to buy Nvidia chips. Yes, some investors are calling it circularity. Others are calling it a round-tripping scheme, accounting gimmicks. Some are even calling it fraud. But the Wall Street Journal is the only media outlet that made any reference to the circular movement of money in the round-tripping scheme. Everybody else is just too busy cheerleading for Nvidia. And keep in mind, this is the same like Bloomberg cheerleading for Nvidia, who got that Gamers Nexus video taken down on YouTube about the Chinese black market for GPUs. Why did Bloomberg do that? Why did Bloomberg perform anti-journalism to protect Nvidia? Probably the same reason MarketWatch and Barron's and everybody else ran that ridiculous "don't listen to randos" analyst note that allegedly debunked this conspiracy theory that now anybody who is capable of reading beyond a kindergarten level or a studio audience for Married with Children in 1989 can understand what Nvidia is doing. By the way, if you're wondering that Married with Children reference, check out that video I did yesterday, and you'll see it was the great famed economist and Polk High football legend Al Bundy who's first spotted gimmicks like this back in 1989. Also, we got wealth tax stages a comeback in France. This is another head shaker this morning, guys. Economists' proposal to adopt a healthy wealth tax has strong support in a poll as public finance deteriorates. Guys, we're not talking about an income tax. They're not talking about taking money you earn. They're talking about taking money that you already earned and already paid taxes on, and they're just going to take it because you have it. This is just confiscation. And here's the little commie halfwit that's pushing for this idea. This Gabriel Zuckman, go Zuck yourself. France's slide into political and fiscal dysfunction is generating a groundswell of support for a sweeping wealth tax that would represent a radical break from the pro-business agenda of President Emmanuel Macron. Macron is not a pro-business politician. I don't know where that came from. But the proposal is the work of French economist Gabriel Zuckman, a former advisor to U.S. Senators Bernie Sanders and Elizabeth Warren. Well, of course he is. Of course he used to work for Bernie. I am once again asking for your support. He wants to impose a 2% tax on the assets of people with net wealth of 100 million euros, equivalent to $118 million or more. Macron and his center-right allies have long dismissed the idea of a wealth tax as a soak-the-rich relic of France's socialist past. France's business leaders have objected to Zuckman's proposal, including Bernard Arnault, the chief executive of French luxury giant LVMH, who said it would be deadly for our economy. Some economists say the tax could hurt investment and economic growth. Look, they passed tax increases in England and all the millionaires left. If they do this in France, all the millionaires are going to leave. They're going to take their money somewhere else. This is what happens everywhere they try this. With Macron's government scrounging for billions in cost savings to rein in its budget deficit, however, Zuckman has seized the moment to demand a contribution from France's billionaires and centimillionaires as a matter of fiscal justice. And I just love this overuse of the word justice among these communist socialist posers. Right? Just take whatever cause du jour you're working on and put the word justice at the end. Oh, we need racial justice, social justice, fiscal justice. Hey, Gigi, I'm out of coffee. Can we get some restorative coffee justice? Thank you. Yeah, okay, keep up with that. Much of the country backs The Economist. A recent IFOP poll shows that 86% of respondents support the Zuckman tax, including 75% of voters for Marine Le Pen's far-right nationalist party and 92% of Macron's supporters. And that's what's so wild about this, guys. 75% of the right and 92% of the left want this. This is going to happen. I mean, Europe is lost to socialism, communism, collectivism, whatever you want to call it. It's a lost cause here. I don't know how you come back from that. I mean, I really don't. Not without bloodshed. Let's just put it that way. Meanwhile, we got Orsted court win against Trump lifts the wind farm makers' shares. Guys, we're getting a little long in the tooth today because I've been running my mouth a little bit more than usual this morning. So I'm going to have to blow through this story. A federal judge said, President Trump, you can't cancel these offshore wind projects. Those offshore wind projects that President Trump had canceled were absolutely killing Orsted. Their stock was in free fall several weeks ago. They're right in the middle of a big capital raise to try to keep the company alive, to try to keep their credit from getting downgraded. And this court win should make it easier to raise that money and avoid the downgrade. I would add that this court is probably not the final say. I'm sure Trump is going to challenge the court saying, no, you can't do this. It's just a setback, but a lifeline for Orsted nonetheless. This offshore wind project was costing them $2 million a day while it was in limbo. And the judge just said, you can resume construction while you argue it out in court. Maybe they finish construction while we're arguing over whether or not they're allowed to finish construction, and then it just becomes a moot point. Meanwhile, drone sightings disrupt flights at Copenhagen and Oslo airports. Guys, pay attention to what's happening in the airspace over Europe. All right, we had that drone incursion, we'll call it, Russian drones fired from Belarus into Poland a few weeks ago. Then we had Russian jets earlier this week flew into, I think it was Estonian airspace. Don't quote me on that. But it was one of the Baltics. I think it was Estonia. Several Russian jets flew over Estonian airspace and circled the capital for 12 minutes before any NATO jets were able to intercept them. And then yesterday we had drone sightings over Copenhagen and Oslo. Now, we don't know who did this, all right? Remember, something similar was happening in New Jersey last year. That story went away real quick, by the way, probably because they were our drones, probably because it was the U.S. government testing their drones over U.S. airspace, using us as guinea pigs to see how much they could terrorize their own population. Isn't that nice? And then, of course, a few weeks after that story fell from the airwaves, we had that big drone attack that disabled Russia's strategic bomber fleet. And then a few weeks after that, we had that big Israeli attack using drones that took out Iranian air defenses ahead of the Israeli-Iranian war. And now we've got drone sightings over airports in Copenhagen and Oslo. Nobody knows whose drones they were, which probably means they were ours, and they're just not telling us whose they were. If they were Russian drones, it would be front page news freaking everywhere. Just pay attention, guys. Drone warfare, it's here, and it's getting worse. Last but not least, we got to end every show with a warning about alternative assets. And this one has a little bit of an insurance angle to it, but it shows they're doing the same thing with insurance companies, which is also your money. If you own life insurance or if you have an annuity through an insurance company, that is your money, and they're playing games with it. Star Mountain looks to issue bonds that bundle up private credit. Star Mountain Capital is planning to sell bonds backed by stakes in private credit funds, according to people familiar with the matter. The sale of senior and junior notes via a so-called collateralized fund obligation, what marketing genius came up with that, is likely to raise less than $500 million, the people said, adding the amount was still being decided. By the way, I mean, after everything that happened with CLOs, and what was the other one? CDOs. I couldn't find the word debt. We had collateralized debt obligations, basically ruined the entire world economy in 2008. Then we took all the crap commercial real estate debt. We put that into collateralized loan obligations. Now that got all saturated. Now we've created this other private credit market for loans to people who can't buy them back, or loans to companies that can't pay them back. Now we're going to collateralize all that crap. We're going to put all that into bonds, and we're going to call it a collateralized fund obligation, as if there's not some foreshadowing happening here. Bespoke securitizations have been gaining in popularity as private fund managers look for ways to raise cash amid a slump in deal-making and fundraising. Carlyle, CGM, Grosvenor, and Dawson Partners are among funds that have marketed CFOs this year. Now, here's the interesting part. CFOs, collateralized fund obligations, are finding receptive audiences in insurers, which have been buying larger amounts of illiquid assets. Remember, illiquid assets means they're not worth what they say they're worth. If I know sometimes liquidity concepts are hard for people who don't live in finance space to understand. When you hear illiquid, just think it's not worth what they say it's worth. That makes them a key new investor base for such deals. These CFOs let insurers get economic exposure to private funds at lower capital charges than if they were to buy shares of the funds directly. It's that last part. That's very important here, those lower capital charges, because the loans that make up these funds are dog shit. All right. These are loans to companies who are paying higher interest rates because they can't borrow it anywhere else. And people are buying this stuff because they're desperate for yield, because nothing else is really doing it for them. And so they're creating a market for these CFOs, these illiquid assets that they can't sell anywhere else. All right. Now, the insurers are not allowed to buy this stuff, not without a big capital charge, which basically capital charge means when you own a risky asset, the government, because of the business you're in, other people's money, the government makes you set aside money just in case those assets go down in value. That is a capital charge. But if you take those same assets and you put them in a box and you call it a CFO, now the insurance company can buy it, and they don't have to set aside that extra money in the form of capital charges, because it's a whole different thing, right? It's Chef Bourdain with the day-old fish soup. It's no longer private credit. Now it's a collateralized fund obligation, and it's not nearly as risky, even though if you open up the box, it's the same stinky old fish inside the box that you're not allowed to buy otherwise. They're doing it with insurance companies now. And that's why I keep warning people, guys, watch out for these private alternative assets. The more complex these instruments gets, the more the shell game is getting complicated, the more they're trying to hide their losses. And ultimately, it's your retirement plan, it's your pension plan, or your insurance company that they're looking to hide this crap in. Oh, I am out of breath. I was talking really fast today. I just want to say thank you very much to my boy, Travis. What's going on, Travis, from Real Estate Mindset? Check out his channel, by the way. He is an awesome channel, and he is leading the charge on property taxes and the confiscation of wealth by local governments. He says $2 on a green LFG. Love you, Jack. Travis, wrong again about the mud color. You're thinking green, but today's totally black, baby. But Travis, I thank you so much for your support of the channel, as well as for being an awesome, swell guy. Guys, check out Real Estate Mindset. Awesome channel there. Quite bonkers, if you will. Thanks again, brother. Jackson Burns says, cup and handle for your coffee this morning. All right. He's saying ORZCF. I don't know that one. I don't know it. I'm not going to bring up a chart and like DD a company live on the air because it's going to be a lot of me going, that's fascinating. And I don't think you guys want to see that. But I'll write down the ticker and I'll look into it. ORZCF. No position, by the way. Thank you very much for the cup and handle on my coffee. I see what you did there, huh? Jackson Burns. Appreciate the support, sir. Also, Stephen Mine King says, dollar is not the target. LBMA is going down. Well, I think you can shoot at both simultaneously with what the Chinese are doing. The reason why London maintains a disproportionate influence over the world economy versus, say, the GDP of Great Britain is because so much gold is stored there, because London pretty much has the gold market cornered at the LBMA. Almost all the ETFs store their gold there. Most investors store their gold there. Even U.S. vaults, small in comparison. If you count the federal government's gold reserves at the Federal Reserve, assuming it's actually there, the U.S. has more gold. But the LBMA's private vaults are massive. Dollar not to target the LBMA. I don't know if that's true or not. Now, the LBMA could have problems here if they have rehypothecated and oversold their paper gold. And what's happening right now, what's happened in these last few weeks, does resemble a short squeeze on paper metals. All right, the physical metal market is fine. There is ample inventory in the physical metal market. You go into any coin shop or any gold dealer, they've got plenty of stuff. Gold Eagles are available at spot price on some of these websites. I just bought some Silver Eagles for $250 over spot. That's less than the U.S. Mint charges the wholesalers for Silver Eagles. So, I mean, there are deals to be had in physical metal right now. It's the paper market that's getting squeezed. You could argue that what's going on with the Chinese and the gold is an attack on both the dollar and the LBMA. Interesting theory, though, Stephen. Thank you, sir, so much for supporting the channel. Hey, thank you to Tom Dillon. Appreciate the generosity, Tom. He says, Danielle DiMartino Booth suggested the reason why number always go up is passive investing, dumping billions daily into the market without even looking at value, earnings, and fundamentals. Sounds logical. Yes. Danielle DiMartino Booth has been fantastic on this subject, by the way. Also on this subject, in addition to Danielle DiMartino Booth, Michael Green has been one of the loudest voices about the passive investing bubble. And what do we mean here? Most people, you donate to your 401k or you contribute to your 401k, right? That is money that comes out of your paycheck. You do not make the conscious decision every paycheck to do that. You set it years ago and it just happens, all right? Most of that money is going into mutual funds or index funds that just buy the index. Now, those index funds buy the index, and the index is disproportionately allocated to the Mag 7 companies, which have run like the blazes right now, which means pretty much everybody with a 401k right now is, without even looking, putting their money into Nvidia, Microsoft, Meta, Google, Tesla, and Apple. I might have missed one. Did I say Microsoft? I might have missed one. So everybody is just buying without even thinking about what they're buying, without even looking at the price. That is passive investing. Now, let me posit this to you, Tom. Hardship withdrawals are on the rise in the United States in 401ks. More and more people every day are tapping into their 401k to make ends meet because of the cost of inflation, and it's getting worse. So we are starting to see the slowdown of that passive inflow in the market as people tap their 401ks to live. That's some passive outflows now. Now what happens if we get a sudden surge of unemployment? What happens if, say, 5% of full-time employees get laid off, and unemployment would go to like 8 or 9%, which has happened. All of a sudden, not only do you not have those passive inflows anymore, they're no longer making a paycheck, so they're no longer contributing and aimlessly buying those, but they're probably living down their 401ks at an even faster rate. Now that passive investing inflow has turned to a passive outflow, and the S&P and the indexes are just dragged lower by it. For every action, there is an equal and opposite reaction. So the situation that Danielle DiMartino Booth has been talking about and Michael Green could very quickly reverse if we see a spike in unemployment. And the job market has been getting weaker and weaker for years, even though the government was lying to us, telling us how strong it was. And we saw with that downward revision of 911,000 jobs that led to the firing of the BLS commissioner, we know they've been lying to us about the job market. Thank you very much, Tom. Good comments, sir. And shout out once again to Danielle DiMartino Booth. Hey, Tom Dillon is back again. Thank you so much. He says 10 more because YouTube takes a cut of the super chats that would make Don Corleone jealous. I'm going to do this service for you. I don't have a Don Corleone. I'm not even going to try it. Look out, I massacred my boy. I need, the Godfather needs work. I'm not going to do that anymore. But thank you so much, Tom. I appreciate you grossing up the super chats. Yes, YouTube does get their pound of flesh, as they always do. They provide the platform. It's their business. I guess that's fair. Thank you so much, Tom, for supporting the channel. And thank you, everybody, for having your coffee with the Melonheads this morning. I'm going to take some deep breaths and drink some more coffee. Don't forget that like button and that subscribe button on the way out. You new guys, come on back tomorrow. We do this every day. Thank you so much for the super chats and the generosity supporting the channel, as well as you, my magnanimous Melonheads on Patreon and YouTube. Links down below, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.